Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. And hopefully lots of opportunities for you throughout the show. The stock market moved up all week long. In fact, S&P 500 and the Dow making an all-time high, pretty much as we had talked about in last week's show. It even managed to try to get an uptick on Friday after the horrible terror attack in Nice, France. We've got to figure out a way to make this stop. As expected, that we talked about on Wednesday's future show, the money is really flowing out of the bond market and into the stock market. So there's a huge source of funds, and the stock market is incredibly buoyant from that. So we had 5 straight up days up until Thursday, until Friday, with a minor pullback going. And I'm doing this show right now with just about an hour to go, so we'll see how that ends up. S&P up almost 3% for the week. Transportation index doing better as it's trying to catch up. It's been a big laggard, and the Nasdaq lags the week pretty significantly. Gold up 35 points on the week. Make that down 35 points on the week. We talked about that last Friday also. And silver futures much firmer. Copper had a huge week, and this is definitely a future that looks like it's going to be going up for a while. We're certainly want to buy the next dip in there. And the oil market, well, a small up week. It has been choppy. Stocks may be in for a rest, and we're going to show you that in the last segment of the show in our short-term view. But we don't think it'll last long, and we think stocks will be moving up again, even surpassing the recent high, maybe significantly. It's really about the fact that money flow has changed. Institutional managers, they got caught leaning in all these safe haven plays. A lot of money parked in the bond market, and we saw 10 years down to 1.33%. Well, they got to pop up to about 1.6% this week, and it shows you how quickly we saw money moving out of bonds. 30-year bonds having a 5-point drop on the week, and that's not likely to end. In fact, we're probably just in the beginning phase of money flowing out of the bond market and into the stock market, which we think could last for a couple of more months. So let's take a look here at our chart here of the ES. That's the S&P 500. That's a 60-minute chart, and we have a bunch of our notes in here that you can see, and this gives you an example or an idea of how the market has been in this uptrend, that it looks like it just simply was able to break here on Friday, but certainly not by much. You can see that. What a steady uptrend. Monday and Tuesday, a lot of talk about Japan stimulus right in here, and you can see that lift. Abe actually talks to Ben Bernanke and Paul Krugman. Give me a break. They're talking about helicopter money. The yen gets a giant hit. Bonds down, of course, and the stocks, equities around the world do get a good size lift. Talking to Paul Krugman, oh, I want to gag. So comes Wednesday, and the oil market has a pretty good downtick in there on some news, but stocks remain buoyant. You can see that right in there. On Thursday, well, same old, right? Equity markets gain again. 30-year bond has a big drop. We put a lot of our traders in there that follow our setups and level 3 and level 4 members in 30-year bonds, and know lots of people had great trades in there. CPI up about 0.5%. That did hurt bonds also, and that really, no negative news really means anything as bonds fall money into stocks, and you get this giant move on the upside here overnight. But then comes that terror attack right over here in Nice, and we get the decline right in over here. So that arrow is actually slightly in the wrong place. But then the markets try to rebound right there on Friday. US CPI comes out only up 0.2%, but the fourth straight gain. Retail sales real strong, and that did lay on stocks pretty good. So you can see there's that uptrend, and barely have a break of that right there right now. So let's take a look at our earnings and economic calendar for the coming week, and you can see that the deluge of earnings are about to come out as we have now started to fill up these earnings reports right in here. You can see pre-opening right in here, all of these right there, and same thing for after the close right here. Big one is IBM here on Monday. You can see that. Microsoft here on Tuesday after the close. And then you have to go out, probably nothing big in here on Wednesday. Thursday we get Schlumberger after the close. That's a pretty good one. And GM before the opening. So this is just the beginning of it. The next few weeks are going to have a ton of earnings reports coming out. On the economic side, there's really nothing there on this calendar that would be a big market moving event. So it's just really about the earnings, and we'll probably see a lot of pretty good movement overnight on a lot of these stocks. So that shows you the earnings and economic calendar for the coming week. That is the opening segment for today, and we'll be right back with the best and the worst for the week. For the best of the week, on a week that mostly saw stocks going up, the big leaders were the airlines and materials stocks. A few other stocks had some big gains, and we'll look at some of those. Take a look here at Seagate, STX. This stock gets a big gain as they guided up, and analysts have upgraded the stock. Also moving up with it is Western Digital. Seagate up 19%. Western Digital up only 4%. These stocks trade a lot together. WDC might want to look at that one to catch up. Note in here that the stock has been in a downward trend. We have our cycle analysis right over here, and those cycle brackets show this stair-step downward move that we've had right in here. And then this rising phase comes right up to this 61.8% retracement level. That is also right around this 34-week moving average, this being a weekly chart, and that looks to us like a spot where it should pull back from. And after the big gain, it is actually pulling back from that level. Now, if it gets above that, that's going to be a really good sign for the stock that it actually is building a long-term base after this big decline. The base would look like this, as I have it drawn, with some modest pullback somewhere out into September, and then being a period where it could move up pretty sharply. So Seagate, big gainer there on the week. Airline stocks, as I said, big gainers. Let's take a look at AAL, and you can see in here a bottom, and we'll call it a very important bottom in place. Note here just 3 weeks off the low on this big week. It had just a giant week on the upside, and a lot of other airlines moving up with it. We think important lows in the airlines in here. You can see great cyclic action in here as you see this almost perfect cycle right there. See that one? This rally that didn't last as long, right? Only up about a third of the time and then falls off. And now this rally coming right on time. We think any pullback in here is a buy, a place to stall right around that 34-week moving average, maybe a little above it. So there's easily 2 more points in here until we get to any real resistance in American Airlines. So up 18% on the week. United Airlines up strong also. You can see a similar pattern in here. Here we have the comparison of American and Delta, and you can see it follows these cycle patterns very nicely. We call that synchronicity in the groups. And here's where the resistance is, right up around $50 right over there, and you can see the 34-week moving average right there. We would expect it to get up and through it. Our target in here would be around $53, so we're going to be buying dips in United Airlines also. The whole group really strong in there. JetBlue up about 8% on the week. Alaska Air up about 8%. in the week. So we're going to call that group all positive, and we get a little market correction going on in here. Those are stocks to buy. I think they're going to move up a little bit higher. We also had big gains, as I said, in the material stocks. Let's take a look at a couple of these in here. CLF is the first one we're going to look at, and this stock gets a solid gain in here on top of solid gains. You know, some weeks back we did this piece that we talked about the DBB moving up. That is the basic materials, and it was set up for a time for big rallies in materials. That was spot on. We've got these really beautiful rallies going on in here. It's pretty tough to find the resistance. If you look at this inverted head and shoulders that's formed right in this period up here, that measures somewhere way up over here. So we think a pullback in CLF and you're going to get more gains. CLF up 15% on the week, just a huge gainer in there. FCX, well, it's a similar pattern in here, right? But it's really just getting going. Look at the inverted head and shoulders in there. In fact, we put that measurement in there, and what that says is that somewhere down in coming months, we're likely to see this stock up around $24. Crazy call, but that's what the pattern says. If it does break above this neckline right over there. Here's some other little resistances of fib extensions in there. So we think that this area of 14, 15 is pretty easy to get there. And then maybe this is the pattern we're looking at right in here. Rallies continue up, get some correction. And then over here out later on in the year, it's got a possibility for some bigger gains. So really a solid pattern in there. Take a look at Alcoa AA, also in this group. This is up by 9%. This has our colored phasing in there, and the green zones, these rising zones, as you can see right in here, right in here, right in here, all giving you lifts in the stock. And this saying that we're going to get above that area there, about 1160. So it's trading right now at 1088, and it looks like there's more upside in there. Steel stocks getting a rise also. AK Steel up 8%. US Steel up a big 12%, coming up to an important resistance area. Can't figure out all the buying there in US Steel. That's some craziness if you ask me. And there's a huge range of what the earnings look like next year in there. Some analysts even say they're going to turn a profit. I'll fade that one. As a matter of fact, I've already faded that one. I think US Steel is going to stop here for a little bit of a rest. Take a look here at Herbalife, HLF. This stock, a huge gainer today as news comes out on the stock, and then it gives it up. Note the huge shooting star in here. For the week, look at this pattern. It gets way up here to 72 and falls off to 64. News comes out that they have a $200 million settlement, and they're cleared. They are not a pyramid scheme, is what they said, but they had to pay $200 million in fines and change the way they pay on their retail sales. And Ackman has really gotten burned on this one. I wonder if Icon sold any of his position out on that big upside move today. He's pretty savvy. I would guess that he did. Last one we're going to look at on the upside in here is Goldman Sachs. Note this green zone as it moves up in this area here, comes up right to a resistance area right there. I actually think that Goldman Sachs is going to get a bit of a pullback. You know, these earnings that have been coming out in the financial area, they're only mixed. And Goldman has had a huge move in here, some 20 points in a blink of an eye. Take a look at the daily chart in here. This one is really interesting as we have our cycle patterns in here. And there's some short-term support right in here. See the slim ribbon coming up right there. See the 89-day moving average. Note that it was support all here and a breakdown here. I'm looking for a pullback in here. Let's say it pulls back somewhere to around, I don't know, 155, 154, something like that, about 7 points. To me, that's logical, and then gets another move on the upside. What do the patterns look like in there cyclically? Well, it looks to me like this rally in here is there, and that the pullback comes something like that. So that's the timing on it, and I would say Goldman Sachs looks to us like it's going to get some kind of a pullback in here for a rest, but still, that intermediate pattern absolutely solid. That is the best of the week, and I'll be right back with the worst. For the worst stocks of the week, there's almost nothing to talk about. Very few stocks had any kind of a measurable decline. A few just to show you in here. We'll take a look in information technology at Adtran. This stock had some good news. They beat on earnings, but then in a conference call they guided lower and shocked everybody. Take a look in here. You can see there is cyclicality in here. When you get a big up move in there, it's almost impossible to find the corrective processes that you have in these cyclical patterns. This one, very visible that you can see here, and the rally right on time. But look what happens. It tests this high in here on that earnings news and then turns south. Take a look at this chart on the daily pattern. Incredible as we get this thing open for you to see. And look at this chart right over here. Earnings beat, but on the guidance call, they cut. And they sucked everybody in, and then the stock absolutely gets hammered. We believe that huge engulfing pattern is a top that is not going to be surpassed for a long, long period of time. If you get a rally up in here, this momentum is being lost. We think it's a short right around 18.5, 19 bucks. So Adtran, you get a bounce in there. I think it's a sale. Take a look at GOLD. This is Rand Gold, major move that it had on the upside. And this pattern in here, we called, and I'll show you in the short-term view coming up, we called for a pullback in the gold stocks. They have not been giving back much at all. GOLD down about 4% on the week. And this looks like a temporary top to us. And gold's just minor pullbacks, and we think that sometime in the next week their corrections are going to be over and they're going to be moving up again. So you can see in here as this thing gives you stalling doji last week and then starts to roll over. But like we said, I don't think there's much more downside in here. There is a stock that I've been cautioning on for quite a while in here that I thought was just outrageously overdone, and that is Yelp. This Yelp pattern in here is suggestive of a big decline. Now it's only down 4% on the week, but we're in this period right in here of correction. I think it's going to get down to $24 or worse. Earnings, of course, are coming out right over here in early August, and that could be a time when the stock takes a hit. I think their model just doesn't earn any money, and the concept that, well, like Twitter going up because it could be a takeover target, or a LinkedIn going up because, well, it did get taken over, that Yelp will get taken over, I think that's a bunch of garbage, and I think the stock is a sale. And believe it or not, that's all of it on the worst of the week. All right, before we get into the short-term view, I want to give you a little peek at our website. Our level 3 and level 4 members get our rankings and setups. We take the 80 most tradable stocks and futures and do 3 different time periods of rankings in there. And then just about every day we put out between 1 and 3 trade setups. Not trades, but setups, letting you know where the best entry is, and that gives you a good opportunity for profitability. Take a look here at our front page of our website. We just want you to see that we have now added in a little marquee in here that shows you our trade setups and what the results have been. We've had 183 trade setups since we started this, well, some 6 months ago. And look at this, a positive 66% good opportunity for profitability, negative only 25.7%. So you can see that's better than 2 to 1. And then we show you what our last 15 setups have been, of which 11 have given you good trade opportunity, and 4 of them did not work. So that is a really good picture of how well we've been doing. I had some beautiful setups on the short side on bonds and soybeans just in the last couple of days. And if you want to know about our membership, you can see right up in the top here is membership options. You just click on that and it will show you everything about our 4 different levels of membership. So that is a look at our front page. and want you really to go there, support us, take a look at all of that. And the information, I think, is just great. Remember, 7 different categories of videos. All right, we're going to get into the short-term view right now. This has been one amazing week. We're going to look at 5 different major markets in here at the short term only. So we look at daily charts, and then we take an accountability of what we did in the last week. It is rare that I can tell you that we have done as well as we have done this week, in the fact that we have had an astounding, let me get this up for here to look at, 90% accuracy this week. It's not often that I get the opportunity to say that to you. In fact, we've had some weeks where we're only 40 or 45%. That's kind of our worst. And we try to shoot for 60 to 65%, which is like a 2 to 1. 90% this week, and this has been amazing. The only thing we really missed on was the fact that we thought the stock market would dip and then make a new high, all-time high. Well, we barely got any dips at all, but it then moved up to an all-time high as we expected. So we get a little ding for that one. The rest of them, like crude, gold, the euro, the bond market, we were just about spot on. And I'm going to show you all of that. So 90% for the week. What a week. And I'm going to show you what I can do for you lately. Take a look here as we look at light crude. And this, again, is the daily chart. We're looking at short term only. And that will give you a good sense for where we get our 90% as we look at what our expectations were in here. So what we said for light crude was that we thought, and I draw like little arrows on my notes in here to set up my direction that I expected. I expected a down up week is what I expected, and that it would come up and test minor resistance at 47.50. Well, it tested resistance up here around 47.20 and then pulled off again. So the shape of the week was right, the support area was right, and we'll call it spot on. Now, notice in here this triangular shape that's going on. That's occurring in this area of a cycle rising. So we're waiting to put a long side trade on in here. We kind of want to see what happens in this period right here. If it can hold and not break down and then look like it's breaking out right here, that's where we're going to be positive. We expect that. We're going to call it a choppy week sideways, and then by late week moving on to the upside and then getting up past these resistances. 3-4 days of choppy sideways movement in here, and then starting to look at getting up back into the 47s and 48s after that. So it might be a week that doesn't make a lot of upside, but we'll call it choppy sideways with the highest probability that late in the week it's going to then start moving up. Take a look here as we look at the gold market /GC. And again, we're looking at the daily chart because it's a short-term view. So what we look at here is, first of all of these synchronized cycles. What we said was that we thought, well, the big gold cycle in here coming down, the smaller gold cycle in here coming down, this nested low area of a silver correction that's expected and gold stocks correcting. So how do I know what all those things are? When I highlight right here, we have these all listed. You can see that says silver right there, and this says GDX miners right here. And this one, when I highlight it, it says cycle brackets. It's supposed to say gold, and this one does say gold. You can see that. So this one, this is how we look at all of the cycle action, and we expected it to come down during this week. What we said was it would come down to about the 1332 support, and that it was a sell the rally week. You could see you only got one little rally in there, and what was the low of the week? Well, it was on day right there, and it was about 1320. So it got a few, just a little bit lower than we expected, but it acted pretty much as we expected. So for the week, we have this drawn. This is my notes on my sheet right over here. I think it's got a few more days that it can move to the downside right in there. But then potentially towards the end of the week, we get another upside move. So kind of what we're looking for is test this area of support, 1315, 1320 in there, and then sometime mid to late week start to turn up and get back up to this 1348, 1354 resistance in there. Now I want to say that on the intermediate, just our intermediate sense is that this 1370 area, 1310 area feels to us like the range it's going to hang in for a while. There's some risk right in over at this period with silver and the GDXs, so you could get something like down, and then up, something like that. We're not sure about that chop in there, but we feel pretty confident that a few more days in here of this correction and then try to get some upside mid to late week after that. Let's look at the euro currency in here, /6E. What we had said last week is more downside pressure, that rallies would fail. We thought it would get down to 1029 and then sub 110 sometime soon after than that. So we said a rally, right? We said it would get down to 1029. You can see that right over here. It's 1029.50. So that was a perfect touch of the minor support. And then we thought rallies fail. Rally up here near minor resistance and then failing. So you can see in here this pattern as it shapes up right here. That's kind of what we're looking at right now. We think that for the way this looks right now is that we're likely to get some sideways chop again. You see this rising zone in here? So we think it'll chop around in here for a bit, and then when it's over with, then move down. So that's what we believe, kind of a sideways chop and then down right in here. So we're looking for only shorts in the euro. We think that there's a lot more downside risk than there is upside potential. And the same thing or inverse for the dollar, as that we think that it could chop around a little bit, but it's really looks like it's going to start moving up again one more time in here. So a lot of risk in here still in the euro. We're going to call a test of 110 or lower in there after it tries to do some sideways chop. Next one we're going to look at in here is the bond market. We're looking at /ZN right now, and what we said was that we thought it would be a down week testing support. Our suggested support zone at the time was 132.28 to 132.14. It has gotten below that. We left the support zone in there for you to see, and you can see it's breaking under there. So what we're expecting in here is a market that late week sets up for a minor rally. You can see we kind of think it's going to test this minor 78% right in here and then turn up. There is a lot of desire to get out of bonds right now because there's just too much money in them, and they need the money to buy stocks that are just leaving them behind. So them are the fund managers, big investors. So that's kind of what we're looking for, is that, and then again another downturn after that. So it depends on how far this rally can go. We're not really sure about that right now. We're going to call, somewhere on this area about 131.13 where that support is, and then trying to bounce. We'll call it a choppy down week with a potential rally late in the week. Something like this is what we see, and you can see the patterns in here shaping up. The dotted one, the bonds, this one, the notes. So you can see there is a lot of synchronicity in there. We're bearish in bonds right now, and that just means that small downs, an attempted rally, and then I think those rallies are sales. We've been selling them all week. We put out sells right over here for our subscribers, and they caught this break. We put out a sell right over here, and then they caught that break. So it's really has worked out really, really well. So that's a look at the bond market, and again, we think that choppy down, try to rally, and rallies don't hold. So now we'll talk about the stock market. We expected there to be a dip in the stock market and then get another rally to new highs last week. That happened. What happened was the new highs. What didn't happen was the dip. The market is just too strong. There is just incredible amount of buying here in the stock market. As a lot of things that have been left behind, especially in the transportation area, are really getting a bid right now. And then a lot of the things that are economically sensitive, like material stocks and steel stocks and airline stocks, right? They're just starting to fly. So what we had expected was that there was going to be a minor dip and then there was going to be a rally. So here is the chart, and we'll show you where we got it wrong. This small cycle right in here, which we believed was going to have one more dip right in here and then move to new highs, well, that dip never happened. And surprisingly, this actually was that dip, and there's no way that we could have known that. It was really short, especially when we look at our intraday charts. It really had us set off. But now we really think we have a handle on it, as the bigger patterns are now aligning, so that helps us. Where we have this dotted line is the S&P 500, this reddish line is the Russell moving up right here. This was the correction, and this is all of them moving up together during this period. Now we're getting into this corrective period right over here. So we believe that it's going to be a minor down week, that declines will be shallow, they'll be choppy, and we have a target, and this we think is going to be hard to get to, is this area at the 23.6%. Now note that it kind of aligns up with this breakout area right over here. You can see that, and that area is around 2128 on the S&P 500. That would be 32 points on the downside. Honestly, based on what I see in this market, it's going to be really tough to come by. But we're still going to hold to that because that's what the pattern suggests. We're going to look for a week that is down and then rallies towards the end of the week or the beginning of the next week. We keep saying this next rally here after the correction tells the story. We move this over from the weekly right now. That is our Fibonacci extension confluence resistances, fancy words. And what that is suggestive of us is that it's going to be a hard area to get through. So if we have this right, then we get some days on the downside in here and another rally and then maybe a bigger correction out over here or a lot of choppy market. For this week, we're going to call it a down week that really is resistant to decline. If you get one big down day and some nervous panic, we think the worst case would be 21.28 and then up again. Yes, we are still looking for positive upside moves in the market and think that the stock market does not have a lot of downside in here at all. Let's take a look at the VIX, and the pattern in here is confirming this in the VIX. Whereas, remember, we said that we thought it would come down for, some number of days and then rally again. Here's the VIX pattern right in here. This sad little rally right here was here, and now this all points to right around the first week of August before the VIX gets to start going up again. That is in alignment with the next point in the weekly VIX. I'm jumping into some member video stuff here, where we have this pattern in here, where right here in a couple of weeks, 3 weeks, is where the VIX is due to have another big upside move. That coincides with the test that we're talking about of the S&P 500 failing somewhere around that 2180 number out in about 2 weeks or so. So that's about a 2-week view of the stock market. Choppy down for the week, maybe one big down day, and then up again. We think it's going to be very, very resistant to declines in here. Money simply flowing out of bonds and into the stock market. That is everything for this week. I hope you have thought that this information is valuable to you. Always looking for your feedback, and we hope that you send us some emails and let us know what you think. I hope that you have a great weekend, a safe weekend in this crazy world, and we are always wishing you great trading.